Welcome to our channel Forex Tips Gainer. We also represent a website www.fxtipsgainer.com.
Thank you for watching a candlestick trading video. Inverted hammer on the shooting star. Many of the single candlestick pattern looks similar to the traders, but most of the identical patterns have opposite meanings. So it is very important for the traders to know them and differentiate them. Inverted hammer and shooting star have identical looks, and these two single patterns are commonly seen in the market graphs. It is very important for the traders and experts to differentiate them for making predictions about the market trend. The inverted hammer and shooting star also look identical. The only difference between them is whether you are in a downtrend or uptrend. Both candlesticks have little bodies, filter or hollow, long upper shadows and small or absent lower shadows. The inverted hammer occurs when price has been falling, suggests the possibility of reversal. Like hammer, the inverted hammer also comes after a downtrend. Its long upper shadow shows that buyers tried to bid the price higher. Since the sellers weren't able to close the price any lower, this is good indication that everybody who wants to sell has already sold. The shooting star is a bearish reversal pattern that looks identical to the inverted hammer, but occurs when price has been rising. So if any inverted hammer is seen after an uptrend, it is definitely a shooting star. Its shape indicates that the price opened at its low, rallied, but pulled back to the bottom. This means that buyers attempted to push the price up, but sellers come in and overpowered them. This is a definite bearish sign since there are no more buyers left in the market. The reversal patterns indicate that the trend can be changed after the sign, or it can stay the same and go parallel. So before taking a decision, more precise signs are needed while dealing with the trend. Thank you. Thank you for watching a candlestick trading video. Hammer and hanging man confusion. Among all the single candlestick patterns, the hammer and the hanging man are very commonly used by the traders. Lots of confusion arises as they look exactly alike but have totally different meanings depending on past price action. If they are identified incorrectly, it can cause a lot of problem to the traders. Hammer and hanging man both have little bodies, black or white, long lower shadows, and short or absent upper shadows. The hammer is a bullish reversal pattern that forms during a downtrend. When price is falling, hammers signal that the bottom is near and the price will start rising again. The long lower shadow indicates that sellers pushed the price lower, but buyers were able to overcome this selling pressure and close near the open. More bullish confirmation is needed before it's safe to pull the trigger. A typical example of confirmation would be to wait for a white candlestick to close above the open to the right side of the hammer. Then the sign is predicted as a buy sign by the traders. The hanging man is a bearish reversal pattern that can also mark a top or strong resistance level. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long lower shadow shows that sellers pushed the prices lower during the session. Buyers were able to push the price back up some, but only near the open. If a hammer sign is seen after an uptrend, then that is actually a hanging man. That is the best way to differentiate hammer and hanging man. Both of these signs indicate a significant change in the trend of the market. So these patterns are very important patterns for the traders and the experts. They can also foretell many other things when they are included into a complex pattern. Thank you.